AblyPro has a global team of over 300 FinancialForce experts that can assist businesses at any stage. Now, whether you are currently implementing PSA, FFA, or any other ERP, or looking to enhance an existing implementation. We promote a unique user adoption methodology during implementation that drives revenue, operational efficiencies, and visibility. Our agile implementation approach ensures user adaptation to evolving business requirements. Now, following implementation, AblyPro aims to be a part of your extended team to maintain, enhance, and support your existing Salesforce and FinancialForce environment. We provide managed services to numerous global clients and drive innovation to the FinancialForce instances with new reports and dashboards, data visualization tools, data cleansing, integration with other solutions, and continuous user training.
Good morning, good afternoon, good evening, everyone. Hi, this is Manish Mehta from AblyPro, welcoming you to this presentation and webinar on FinancialForce general accounting concepts. So we'll wait for some more people to join. And I'm just waiting for some more people to join here. Then I will begin with a small poll to understand at what level of FinancialForce accounting implementation the whole team is right now. So I'm launching a poll here. I would like people to answer to this question. At what stage of FFA implementation are you in? So, good. We are getting good response from the people here. Okay. So I'm going to end this poll here. So we have got a good response. Most of the people they're already implemented the FinancialForce accounting and they are supporting users on daily basis. So, as you know, FinancialForce accounting is a accounting software which is basically used for the large, medium, small enterprises, and it supports accounting in all its purpose. So, when we are going to discuss and we are going to implement FinancialForce accounting in our organization, the team must be aware of the general concepts which FinancialForce accounting as a user, you must be aware of those concepts before you jump into the actual working of the FinancialForce accounting. So webinar today, what we are trying to display is the general concepts, the concepts which will definitely help you in achieving more than from the FinancialForce in the accounting terms, and they will be backbone of your software in coming period. So the topics for today's meeting are as follows. So first is your chart of account. Second is general ledger account. Third is dimensions in FinancialForce accounting. Fourth is tax codes in FinancialForce accounting. Fifth is tax rates, custom input forms, FFA documents and status, transactions, and finally we will end this webinar with a small topic and discussion on list views. So let's move to the first slide of the webinar, which is chart of account. As a definition said here, a collection of general ledger accounts, entities, and analysis dimensions organized into reporting structure is known as chart of account. Basically, chart of account is a collection of all your general ledger accounts, which are grouped in 5 different account types: assets, liabilities, revenue or income, expenses, and equity or share capital, as you can say. So generally, all your general ledger accounts are grouped into these 5 account types. And the most important factor is that there are 2, in FinancialForce Accounting, we use a global chart of account and a localized chart of account. For example, there is an organization which has its base in the United States, but it has branches all across the world. So United States, the company in the parent organization, they can have a global chart of account. And across the world, they may have, in the other branches, they may have a local chart of account. Now, that global chart of account, in FinancialForce Accounting, we have the capability to consolidate the whole, the complete chart of account with the global chart of account, which we call as a corporate chart of account, that can be mapped to a local chart of account. It is basically used to consolidate the transactions across the branches with the global chart of account and the global organization. I will take question answer at the end of the session. If you please allow me to continue with that. And we will definitely look upon all your question answers at the end of the session and try to answer as much as possible. The purpose of this consolidated or this chart of account is to make sure that the company which is implementing this FinancialForce or this accounting software, they can get accounting reports accurate, like balance sheet, which is comprised of your assets, liabilities, and equity. Profit loss, that is, you can call that as an income statement, which comprises of your income and expenses. And the trial balance, that is all the transactions over the period of year, which are grouped in a particular report in the transactions wise, with debit, credit, and the closing balances. And there are various other ratio analysis reports and other reports which are facilitated because you have created a very good chart of account. So creating a very good chart of account, a chart of account which covers in each and every aspect of your accounting requirement is a necessary. It's a necessity. You can't just ignore that. You have to make sure that your chart of account creation should be up to the mark, and people associated with creation of this chart account must take into account every single aspect of the organization when they are trying to create that. Now let's move to the general ledger account. I'll show you some basic examples of the chart of account types first here. Okay, so you can see there are few general ledgers here created and which are mapped to different account types: assets, liabilities, equity, revenue, and expenses. Now, assets can be divided into your short-term assets and the long-term assets, what you call current assets and fixed assets. So current assets are basically your account receivables, something which you are going to receive from your customers. That is your current asset. And then there are long-term assets like your investment in land, machinery. This is your long-term assets, your fixed assets. Then they can be subcategorized into tangible and intangible assets also. Tangible assets, something which you can touch, which you can feel. And like land, machinery, or furniture, fixtures, all this stuff. And intangible assets like patent, like your softwares. In fact, those are intangible assets. They definitely add value to the organization, but you can't touch them. So anything which is a resource which gives you a value is an asset for the company. Similarly, the second point is liability, second account type. Liability is something which we owe, which we need to pay. So they can be current liabilities. There are two categorized into two mainly, current liabilities and non-current liabilities. The current liabilities are like accounts payable, your short-term loans, long-term liabilities, your mortgages, your bonds. So these are your long-term liabilities. In fact, employee wages are also a short-term liability. That is, you have to pay every month the wages. Then equity. Equity is something which is the capital which is invested by the investors in opening up the organization, and something which is left of the business after you subtract all the company's liabilities from the assets. That is your equity part. That is something which you're gaining, or you can call as it. So equity here, or you call it as a share capital. Then you have revenue. Revenue, some people call it income also. So revenue keeps track of any income our business generate. So there are basically two types of revenue or two types of income: direct income and indirect income. When we're talking about the direct income, that is through sale, what the income which we earn through sale, that is a direct income. And income which we earn through sundry activities, like you are earning interest on your bank account, that is an indirect income, because you're not earning through your project execution or something. So that is your indirect income. Now we have the last one, expenses. Expenses also are categorized into two parts: direct expenses and indirect expenses. So first we'll go through this definition. Expenses are all the money and resources you spend in the process of generating revenues, that is utilities, wages, and rent. So as I said, expenses are also two types: direct expenses and indirect expenses. Now, direct expenses are expenses which are directly related to your project or any activity which you incur due to your basic investment in the project. That is your direct expenses. And indirect expenses, something which is not related to your project, like bank charges, penalty on the bank charges, or the bounce check charges. These kind of charges which are incurred are known as indirect expenses. Okay, so you see these numbers here. We have categorized these journal ledger account into these numbers. So 101 starts with your assets. So 1 is categorized for assets, 2 for liabilities, 3 for equity, 4 for your revenue, 5 for your expenses. So these are general nomenclature standards which we follow while we generate this chart of account, or when we create the journal ledger account into the system. So now let's move to the journal ledger account. So as per the definition which we have written here, a journal ledger account is the first element of an accounting code. It holds the chart of account and is used to determine a company's financial statement. So whenever we have to create a chart of account is nothing if there is no journal ledger account. Chart of account is just a structure. So every chart of account needs journal ledger accounts, which we are creating in the system. So journal ledger accounts are the repository where our transactions will finally move, and they will be presented in the form of a report. So there are 5 different types, as we discussed earlier also. The 5 different types under which the journal ledger accounts are normally categorized: your assets, liabilities, income, expenses, your equity, share capital, and the retained profits. Retained profit is nothing but over the last couple of period or couple of years, whatever profit or loss you have maintained, that goes into your balance sheet report. Now, whenever we are creating this journal ledger account, it has to be marked that what type does it belong to? Is it a balance sheet? Is it a profit loss? Or it is a retained earning? So when we are saying a balance sheet, then something which is related to assets and liabilities. Any general ledger account which is pointing towards assets and liabilities is your balance sheet type general ledger account. Any ledger account which is pointing towards your income and expenses is your profit and loss general ledger account. And finally, the retained earnings. Now, before we move to dimensions, let's understand. So general ledger account, it's not just when you create this account type, general ledger, when you create the general ledger account, you select the ledger name, you create a ledger name, you select the type, you select the subtype, and general ledger account is the last in the list of those types, subtypes, and groups, subgroups. So when you are when you're creating a general ledger account, it has to be the last one where you are going to deposit your transactions, or transactions will get created into that particular system. I'll try to show you something here. Give me a second. So this is a list view of a general ledger account. So whenever we are creating a general ledger account, so we can name our general ledger account here, like test account. You can say 1001 test account, and we can put the reporting code. Reporting code is basically used to generate reports according to the reporting code, and it becomes easy to generate all your financial reports based on these reporting codes. So we are naming that general ledger account as 1001 test account. We select the main type. What exactly is the main type? Balance sheet. Now under balance sheet, which is the second one, assets. Now under assets, what is the other categorization? So it will, these are all pick list value which are dependent on each other. So trial balance 2 is dependent on trial balance 1. So under assets, what is it a current asset, fixed asset, intangible assets, or all? So this is how we create. Under current asset also, we can select a type of asset, a bank and cash, account receivable, or like that. And we can just save it. So when we are creating the general ledger account, we can one by one, we can select the drop down and we can select the actual point location where that particular general ledger account will belong to. That is very, very important for creating your accounting reports, because system will definitely put the values into those particular locations. And when you generate the reports, if the categorization is not done properly, you will not get your reporting correctly, accurately. So it is always advisable when you're generating this chart of account, this collection of general ledger accounts, the exact location of that account under the type, subtype, whatever what you call as trial balance 1, trial balance 2, all this stuff. So you have to particularly mark this general ledger account into those particular type, subtype. Otherwise, your reporting will not be proper. So this is a very important factor, which we will definitely discuss further in other webinars. But this is something which you need to take care also. Now, dimensions. So dimensions is a unique feature. Dimension is nothing but a characteristic. If you ask me, I will call it is a characteristic of a particular account, a particular invoice, a particular payable invoice, a credit note. It gives you an enhanced feature on that particular transaction. So I will just go through this definition here. FFA dimensions provide a company great flexibility in assembling and reporting financial data. Absolutely correct. They allow us a greater structure, greater reporting abilities, greater filtering abilities, actually, if you ask me. See, simple. It's a very simple thing. When you are creating a transaction, if you add a little more information regarding that transaction, like industry, which industry it belongs to, which region it belongs to. So basically these dimensions, when we are discussing the dimensions are basically region, practice, group. We call it RPG. So basically these are part of those particular analysis dimensions. So it basically helps us to generate that if we are generating a transaction, which region it belongs to, the sales invoice. For example, let's say if it's an invoice, which practice group it belongs to, which group it belongs to finally. So, and we have the fourth dimension also, which we can call it as a project. If there is a project, we can mention that dimension as a project there. So dimensions allow us to give a better flexible reporting abilities for a particular transaction. And this will definitely serve in a long manner, in a long way, in basically defining beautiful reports regarding, if you want to search a report, how many invoices are there in Americas region and what kind of revenue we are generating there. So these kind of filters, these dimensions allow us to create those kind of reports. So FFA dimensions act like multi-dimensional filters here. And these dimensions are not directly associated with financial transactions. They can route through the invoicing, your credit note, your debit note, your payable credit note, payable invoices. So from whenever you are creating those invoice, you can select actually for which dimension does it belong to. If I can show you something, I'll try my best to show you here. So like this is a sales invoice here, okay? So when we are creating a new sales invoice, for example, I'll just show you how the dimensions are being captured here. So you see, you can select the company. Just for the example I'm taking here, and you can select any account here. And you can select the dimensions. Dimension 1 is region, dimension 2 along in the dimension 1, craft work, or some kind of this. So you can select. So this is region, practice, and finally you have a group. You can select a new dimension, or you create dimension directly on the fly here. Or if you have created already in the dimension 1 in the system, so you can create dimensions from here. Dimension 1, dimension 2, you can go and create new dimensions here. So you have an option to create dimensions, dimension 1, 2, 3, 4. So all these dimensions, when you create a transaction, when you create a document, in the creation of document, you can select the dimension there. And then you can, and these dimensions get posted to the actual transactions. And then they allow us to have a greater reports on those. So let's come back to the presentation again. So here we are writing. Common examples include location, region, profit center, and department. So in this example, you see general ledger account, dimension 1, dimension 2. In this example, they have combined industry and department. So here it is always already mentioned. Industry is always used only for the revenue accounts and department for expense accounts. So this is how you can put the dimensions in your transactions here. Dimensions are very easy to set up with the username and the reporting code. So you can prefix the dimension name with a username, or you can prefix a number before a dimension name. and you can set up the dimensions here, and you can select these dimensions while you create the transaction, the documents. Now, let's move to the tax codes and rates. FinancialForce supports a comprehensive tax structure, a very comprehensive tax structure. It has given us a power to define our own tax codes, tax rates. Tax rates are basically part of the tax code. If you create a tax code, you can create tax rates under those tax codes. So FinancialForce has an amazing tax structure which in the system. So, and there are basically three main types of tax codes here. That is your SUT, sales and use tax. Then you have GST, goods and service tax. And you have VAT, value added tax. So as we said, as we have written here, we must create a separate tax code for each different type of tax we need to record. And more importantly, tax codes are not standard in the whole system. They depend on which country, in which region you are in, what governing laws are there, because there can be no uniform tax structure across the globe. So FinancialForce has the capability to make sure that you can create your own tax structure as per the governing laws of the country, as per your customers, as per your vendors, and which allows the greater flexibility in the system also. So, as we said earlier, there are three main types of tax codes: goods and service tax, sales and use tax, value added tax. One by one, we will read out. So goods and service tax, they are levied on most goods and services sold for domestic consumption. So they are kind of a sales tax, in fact. So whenever they're kind of a tax which is applied on goods and services which we are selling right now. So, and that structure, that tax rate. So when we are creating a tax code like goods and service tax, so we can create tax rates under goods and service tax. At one moment of time, one tax rate will be active for one tax code. For example, right now we are in month of April. So whichever tax rate is right now available for us, if we create the transaction, this would be active and this would be updated in the system. So as per the date, as per the period which is mentioned in the tax rate, let me go back to the earlier slide. You see this structure, this tax rate. So there are start dates mentioned here. So the latest one is the first one. So if I'm creating a transaction after the 5th May, 20th May, 2011, it will take 5% of the tax rate because that is the last one which is active in the system. So we need to be very much aware which is the tax rate is right now available for the taxation purpose in our documents. This is an important concept. So every tax code which we create here has an associated tax rates. Those are the line items in the tax codes, which we can see that, and which, according to the date, are active at that particular moment of time. So first is goods and service tax. That is levied on most goods and services sold for domestic consumption. Then there is sales and use tax. So when we are talking about the sales and use tax, a consumable tax placed on retail and sales, lease, or rentals of most goods and any taxable service required in the location. Use tax, basically, see, it is there are two texts right now. Sales and use tax is not one term. It's basically a one term, but it is two texts actually. One is sales tax, another is use tax. So use tax is applied when merchandise is purchased outside state lines, or it is for use or for consumption. So we have to, but it is categorized into one code category, that is sales and use tax, and we call it SUT. Whenever we are creating those transactions or documents, we apply that SUT in the document. And according to those SUT, we can generate the tax rates. Then the last one is value added tax. This is also, sorry, excuse me. This is also a consumption tax added to a product sales price. It represents a tax on the value added to the product throughout its production process. So this is an important tax. Many countries have updated their VAT structure with the GST also now. But still, there are standard VAT tax rates prevalent in most of the countries across the globe. And it is used extensively. And as we said, FinancialForce is a global software. So wherever this software is running, people may or may not like to use the VAT or whatever. So they are free to configure any tax code as per their governing country laws. So this was all about the tax and tax rates, tax codes and tax rates. Let's move to the next part of our presentation here, custom input form. So this is a legacy thing basically. Right now in Lightning, we have all the page layouts and all the structure which we are capable of generating different kind of pages for all our needs, like document pages. By sales invoice, we can configure that or sales invoice page. We can configure payable invoice page. We can configure all our pages there. We have a page layout system. We have fields and columns. We have all the structure available for us in the Lightning. But custom input form was one of the most important factor in defining the way our pages should look when we are trying to enter the records into the system. So they are basically utilized through input form manager in FinancialForce Accounting. They allow us to create custom forms. And these custom forms basically allow us to define the way we want to input the data into the system in a better, streamlined manner. This is a very important factor because every other person who is trying to enter the document into the system may come from a different mindset. He wants to see a page in a particular manner. The way he is using the system is different the way other person is using the system. So every organization may configure the pages, the documents pages, as per their own organizational process, the way they follow in the company. And this is the best part of FinancialForce. They allow us to define our own pages while we're creating these documents. And this gives an immense capability to the system, to the user, to enhance its perceptual value. They can perceive things here in a better manner, and they can utilize things in a better manner. So we can use this custom input forms for creating the pages, for editing the pages, or for viewing the pages. So when we install the system, there are default custom pages. We have default input forms we have with us for all the 6 document types. Normally the 6 document types are as follows: sales invoice, sales credit note, payable invoice, payable credit note, journal, and the cash entry. So one by one, I will read through this particular thing. and then we can discuss. Sales invoice, a default custom input form that allows us to create and send invoices to customer. It includes fields for customer information, item description, quantity, price, and any applicable taxes or discounts. So we have the capability to define our own custom sales invoice page. And most importantly, the best part of defining these custom sales invoice pages is, suppose your organization has many companies, company A, company B, company C. Company A may follow SUT, company B may follow GST, and company C may follow VAT. And they are doing sales invoicing there. So we can define our custom input form in such a manner that one sales invoice form may be totally dedicated to SUT, which may be mapped to a company A. Then there can be a sales invoice form which may be modified to serve VAT and which can be mapped to a company which is following VAT. And the third, that can be totally modified to serve GST, and that can be mapped to a company which is following GST. So you see, a custom input form has the capability to modify in such a manner that one document can be segregated into number of documents, same type, which can be mapped to different companies as per the requirement. So this is the best part of custom input form and the possibilities we have in FinancialForce, which allow us to define such pages for us. And this granularity, you say, is a very important and amazing factor of using the system, FinancialForce Accounting. So sales invoice, we have another page called sales credit note. It is used to adjust or cancel a previously issued sales invoice, allowing us to issue credit notes to customers or return or adjustments. It includes fields for customer information, item description, quantity, price, and tax information. Similarly, we have payable invoice. Again, the same structure can be followed for payable invoice also. We can have different payable invoice pages which can be mapped to different companies. Payable invoice are documents that are business received from their vendors or suppliers requesting payment for goods or services. Payable credit notes, typically a financial document, basically dependent on the payable invoice. Typically a financial document that is issued by a supplier or vendor to a customer to request a credit for goods or services that were previously billed. So now, most of the time, it may happen that you purchase something from the vendor, but you don't like that. So you are returning that. So you're given a payable credit note also, because you didn't utilize the service of the product which you receive, or there was some defect, or there was something which you didn't like or didn't use. So you are returning it back to the supplier and they are giving you a payable credit note on that. Then there is journal. A journal entry is a record of a financial transaction that shows debit and credit. So journal is basically an adjustment entry. This allows at the end of each month or each financial quarter or financial year, people in the finance department, they create journals to adjust wrong entries or to adjust any entry which, as per the audit, they encounter, and they need to make adjustments in the financials so that the proper report can be generated. So system allows us to create transactions which are directly not linked to any billing document, like sales or input in purchase. So that is your journals. And then there is a cash entry. Cash entry is a type of a journal entry that records a cash transaction, such as deposit or withdrawal from a bank account. So it typically includes information such as the date, amount, account name, a number, and any relevant notes or description. So this is a very important factor, because if you receive cash or deposit cash, or pay cash. So these entries need to be generated into the system so that you can match them with the relevant invoice and can close the transaction. Now, let's move to the other part of the presentation. That is your FFA document status. Now, when we are talking about documents, there are 7 main document types in the system right now in FinancialForce, and that covers each and every aspect of the financial transactions which need to be created in any financial software. That is your sales invoice, sales credit note, payable invoice, payable credit note, cash entry, payment, and finally, journal. The most common thing among all these documents is these 3 statuses: in progress, discarded, or complete. First, in progress, which shows that the invoice has not been posted and we can continue to make changes in it. This is a very important factor. Whenever we are creating a document, the first step would be the in progress. It allows us to view what we have created, and it also allows us to make changes, if any, if we want to, due to some requirement. We can make changes during this particular period when the document is in progress status. And that we have to keep in mind. The second one is discarded. If we are not satisfied with the document which we have created and which is in the progress, we can discard that document, and the status of that document will be changed to discarded. So that document is no more relevant for our system. No transaction will be recorded against that document. That is something very important. No transactions will be recorded against those discarded documents. And finally, we have a document called complete. This is the one which we definitely look upon and which is the backbone of all our transactions in the system, financial transaction in the system. This definitely helps us in generating financial reports. Whenever a document is marked as complete, it shows that invoices are complete and posted to the general ledger. The entry moves to the general ledger. Associated ledgers are filled with the values and they can be represented in the reports. The most important factor regarding this complete status, that once the document is marked complete or posted, as we say, we cannot change the values in the document, financial values in the document, because that will impact our reporting, that will impact our financial documents. So this is the most important thing. When you are trying to create a document, be very, very sure when you're trying to complete the document. And it has to be a very important decision. You can just don't mark it a complete just to make it a complete. You have to just read each and everything. And if you're satisfied, mark it a complete just to make sure the values are posted to the general ledger. So let's move to the other part of the presentation. That's transactions. Okay. In the earlier slide, we discussed there are 7 main types of the document: sales invoice, sales credit note, payable invoice, payable credit note, cash, journal entry, and payments. These are the documents which generate transactions. When we click and when we change the status to complete, the financial postings are done and a debit credit transaction is generated into the system, which ultimately results in generating the relevant financial reports. So transactions. So transactions are created when any document is posted to the general ledger. Very simple term, but it is complete. It is complete in its definition because it allows system to fill the transactional values, the debit credit values, and allows us to generate financial reports, balance sheet, trial balance, income statement, ratio analysis, and all those reports, which will ultimately help us in achieving the goals of the company. So some documents are posted manually by the users, yes, but other types of documents such as cash matching journals are posted automatically. So all your documents like your sales invoice, payable invoice, they are posted manually by the users. So this is a basic screenshot of the transaction. I will try to show you a transaction page also in the system. Just give me a second. Okay, so this is a transaction page in the system. You see? So transaction line items. So one is the general. So it starts with your general ledger account. It shows you the debit or credit, shows you the product. If there are dimensions associated with this particular transaction, you see dimension 1, dimension 2, dimension 3, it will show into this particular line item. And then the other line item, the debit. Ultimately, the main crux is any transaction will be marked complete or is complete when debit matches the credit. Whatever we have value in the debit, that can be multiple line items. It's just 2 line items here in this example, but they can be transactions which have multiple line items. But the basic thing which you need to remember is the debit value of the transaction must match the credit value of the transaction. Simple. And the transaction will be complete and it is perfect. And it has hit different general ledger accounts. So let's move again to the presentation. So transaction generated from document comprise a transaction header and multiple transaction line items. There are account items, there are analysis items, and the tax items. So account identifies the vendor or the customer. Analysis items, they identify the product and the services. And then finally, we have tax item, which identifies the tax applied on that particular document. That can be any tax, so SUT, VAT, or GST. And the status of the transaction, there are various status of the transaction here. I'll just try to figure out. So the transaction, which is, hold on, I'm trying to share, which is the transaction status first is available. That is, line is available for matching. Matched, that is, this transaction has been matched. Non-matchable, line is suitable for unmatching. That is a text line. And proposed, that is a part of your payment proposal. This line has been included in the payment proposal. And it is not available for manual matching or to be included in another payment run. So these are the following match statuses of the transaction. And finally, we are in the list view. List view in the FinancialForce specifies a set of records for an object based on a specific criteria. Now, list view is a very important factor. It's a view which a user can generate on its own. They want the way they want to see the document into the pages, on the screen, the list of the items on the screen, and they can define the columns which they want. They can define the filters the way they want, and they can share and they can clone that list views also. So list view in FinancialForce specifies a set of records for an object based on a specific criteria. From this page, we can view detailed document information and access other related information. We can put a filter also. We can create our own list view also. We can use a list view with many document types. So now I'll show you an example here, how a list view can be generated. Okay. Okay. So let's say this is a sales invoice list view. Okay. So now I'm saying all the sales invoices. So if I want to, this is a list view. If I want to create my own list view, I can create a new list view here. And in that list view, I can add fields to display. So here also, we can add a select fields to display. We can select field which we want to display more. Right now, if you see, there are fields which are ending here. Okay. If I want one more field to be part of this list view, I can just go to that particular field, select fields to display. I can say project. And I will move to the right side and save. And you see a project field is also displayed here. We can clone this list view. We can rename this list view if you want it, whatever ways we want. We can share this list view with people around. If I can say share with list of people or group of users, or if I can I'm the only one who can see this list view. So we can define list views and we can define the accessibility of the list view. So this is all about the list view. We can discuss further on these list views in other upcoming webinars. So this is a small screenshot for the list view here. And finally, thank you so much. You can contact us for Salesforce Service Cloud and Field Service Success Consultant also. This has our social media handle, phone and email and address mentioned in this particular slide. So thanking you once again for joining this webinar. Let me see what question and answer you have. Okay. So thanks for taking out time and coming here for this particular webinar. Thank you so much. We will meet in the next webinar next month. Thanks once again.